So welcome back, everyone. I believe you're doing fine and well. And this is just a follow-up on what we started last week, the series on chart pattern. Okay, because you've seen me pick trades, you've seen me analyze the market every single morning for the past 3 to 4 months now. June, July, August, September, October. I think it's 5 months. This is the fifth month already. All right. And you've seen me use every single thing from trend line to RSI indicator to chart pattern. You've seen me use all of these. And what I'm trying to do right here is to break every single thing down for you to be able to do that as well. All right. So I'm going to break this down into a little bit of chunk. So it won't be long. Okay. I want to make the video just 30 minutes, okay, so that it will be precise. When you're watching it, you can easily enjoy it, and every single thing will be posted on our YouTube channel. Okay, so if you're also watching this on YouTube, you can as well just go ahead and click on the subscribe button, likes, and share with your friend. So without further ado, guys, let's get straight into the video. So first off, this is the second part of this session, okay? Is the phase one, but the second part of phase one. So the step here is to do what? Is understanding the chart pattern, okay? Understanding the chart pattern. So we've talked about, I've introduced you to chart pattern. As a matter of fact, I even correlated it with a couple of other patterns in the market that some of our favorite YouTubers, some of our favorite friends, some of our favorite traders use, okay? I was able to correlate some change of character, market shift, FVG, all this break of structure. I've been able to correlate them to chart pattern. And if you actually look very closely, you will see that there's nothing new under the sun. Nobody is bringing something new to the market. Nobody is bringing anything new to the market. As a matter of fact, if you're a trader and you think you can bring something new to the market, the only thing you will bring is probably confusion to yourself. Okay, it's either you're trading chart pattern, which can also be correlated to price action. As a matter of fact, every single thing in the market can be correlated with chart pattern. It is as simple as that. Everything in this business can be correlated with chart pattern, can be counted as price action. Okay, and for you to properly understand what price is doing, there are some patterns you must understand, okay? That you must understand. And for you to understand all of this pattern or all of this momentum, you've got to understand the chart pattern. Because every single day in the market, every single day, the market forms pattern. Because that is how it moves, okay? It's either the market moves like this, or it moves like this, or it simply does what? It just moves like this. Okay. Although there are so many people that still has an issue with these three market momentum or three structures. Maybe it's not a problem. Maybe they just don't believe in it. They believe the market has several way it moves. But if you look at the chart very well, critically, you will understand that it's either the market is going up, or it is coming down, or it is ranging. These are the three main structure in the market. To me, my own humble opinion, let me put it that way. It's either the market is going up, or it is coming down, or it is simply what? Or it is simply ranging. It doesn't do anything other than these three things. It's either the market is going up, or the market is coming down, or it is simply what? It is simply ranging. So how would you know when the market is going up, when it's coming down, or when it's ranging? Okay. And then how would you be able to trade it when it's going up, or when it's coming down, or when it's ranging? How would you trade it? That is when chart pattern comes into play. Because you can understand the market, you can understand the market momentum, you can easily understand how the market moves when you get a full understanding of chart pattern. And that is exactly what I'm planning to share with every single one of us here in this series. So all I want from you is to sit back and enjoy this session. It's just going to be under 30 minutes. All right. So, like I said, I'm going to break it down into step by step so that by the time you're watching this on YouTube, or by the time you are rewatching it on YouTube, you're going through it again on YouTube, it will make a much better sense. Okay. So many people don't like chart pattern. I told you that three things don't make some people, I've had people say that doesn't make them trade chart pattern or don't even consider chart pattern. Number one, because they think is what it is too easy. Okay. Number two, because they think is what it is hard. And number three, because they think it is useless. Okay. It's either it's easy or it's hard, or they just don't believe in it. You understand what I'm saying? It's what no matter the excuse people give you in this life, no matter whatever anybody say, it's either they are not interested, or the thing is just too hard for them, or to them it is just too easy. That's it. When you see something, when you think something is useless, you won't be interested in it. When you think it's too hard, you won't go into it. When you think it's too easy, it will also like repel you. You understand? So these are the three things that people, these are the three, in my own personal opinion, guys, that the reason I think, based on a couple of questions I've asked, based on people that I've been able to talk to, these are the reasons they don't trade chart pattern, or they don't even consider learning chart pattern. And these chart pattern are old, they are OGs. Let me put it that way. They are what? OGs in the market. Okay. Just like what we learned when we were starting up as a trader, higher high, higher low, higher high, higher lows. This is an OG. These are the traditional way of trading. This is the ways that the likes of George Soros, if you read Naked Chart, if you read books like Wizard, Technical Analysis Wizard, all the Wizard series, these are the things that you will be taught. And then you start thinking, why weren't anybody trading SMC back then? And they make money. Why weren't anybody trading FVG, other blocks, and the like? And they all make money for themselves, and they all are successful. And all the thing they are telling me, all the thing I'm reading on this book is just chart pattern, follow the trend, follow IIs, draw support and resistance, draw supply and demand, just follow the trend, use moving average indicator, use momentum indicator to spot the direction, to spot the momentum, and then just trade it. Then you will start asking yourself, so what is going on? Or maybe some people extend it to use Fibonacci, use this, just the basic tools that you can easily find on MetaTrader. That is what they use to make money there. They just simplify the strategy. They simplify it so much that they can teach anybody. And then you start asking yourself, why weren't anybody talking about this on YouTube? Why is it so few people are teaching this thing on YouTube? Why is it that so many people aren't talking about this? Because I genuinely don't know. All right. But to me, I'm going to teach you the simplest way or the easiest way I know how to analyze the market and how to trade. And that so far, for the past couple of years in my trading career, it has yielded me success. It has yielded me profit. And that is why we're going to be getting into this. I need to do this introduction because I need to put your mind straight. As a matter of fact, some of you might follow on the call because, like I said, it's either it's too easy for you, or it's too hard for you, or it's too useless. One of the three. It's either it's too hard for you, or you just think this is easy, man. Or you just feel like, I beg, I don't need this. You understand what I'm saying? But if you stick around and you learn this very well throughout this series, believe you me, you're going to enjoy the kind of trader you're going to become. All right. So let's get straight into the video properly. So, what is chart pattern? Okay, what is chart pattern? Let's start from here. What is chart pattern? So, chart pattern is what is a tool in technical analysis that helps trader to do what? To identify potential trends and price movement. We talked about this at length last week. Okay, in the financial market, they provide visual representation of the market psychology. You see, we talk about trading psychology and then market psychology. And you ask yourself, what is the difference between market psychology and trading psychology? Trading psychology deals with you because you are the trader, right? The market is there. The market is not the trader. You are the trader. So your psychology has to be top notch. You can't be emotional. You can't be angry. and you can't be stressed. Okay, you are not allowed to, even though you are in the market, you are what? You are not allowed to be angry, you are not allowed to be frustrated, and you are not allowed to be stressed. Do you understand what I'm saying? So, as a trader, there is a psychology, there is a level of psychology expected from you to have grown into or to have developed for you to be able to handle the complexity of the market, basically. Okay, for you to understand the complexity of the market, or for you to be able to handle the complexity of the market, you must have grown into a level of psychological strength. That is the trading psychology. But now we are talking about what? The market psychology. Understanding the market psychology is when you can accurately forecast to a very large extent. Let me say that again. When you can accurately forecast the market movement to a very large extent, that means you understand market psychology. And it doesn't come cheap, it doesn't come free, it doesn't come in 2 months, it doesn't come in 3 days. It takes a lot of time. It takes a lot of practice. It takes a lot of sitting down in front of the chart, understanding the market momentum, understanding chart pattern, and you can easily forecast where the possible market movement is going to be, or what the next thing, or the next thing the market is technically going to do. All right, that is market psychology. When you understand where and what is going to happen in the market next. So they provide a visual representation of the market psychology and investor sentiment. Okay, when you can look at the market and figure that, okay, so if euro dollar is doing, it's forming this kind of pattern, that means so many retail traders and excuse me, so many institution traders are shifting from bullish to bearish. Okay, they are shifting from bearish to bullish. Okay, and that's why we have a pattern like reversal pattern and continuation pattern. When you see a reversal pattern, you start feeling like, okay, there is a possibility that the the sellers, okay, the sellers are changing their position, they are changing their sentiment, okay, into buying. Or maybe the buyers are changing the perspective about the market, and they want to start selling. So market don't just drop down. Okay, not all the time. As a matter of fact, it is quite rare for you to see the market to just drop down from the top. No. When the market has extended itself and exhausted its move, right at the top here, it will form a pattern that will indicate that the market is about to what? To start selling. And that is what some people call change of character, the market shift, or you can simply just call it a reversal pattern. It is still the same thing. It's a pattern. Whether it is market shift or change of character or whatever. There's a lot of what they call it, the concept in the market right now that it is quite hard for even if you're not an English speaker. I mean, if you're not born in an English speaking country, it's very hard for you to even pronounce them sometimes. You understand what I'm saying? So you just need to understand the basic thing, okay? You don't need to dump yourself down for the market. You need to dump the market down for yourself. You have to dump it down. And I'm saying this again, dump the market down for yourself. Keep it simple, okay? And when you understand market structure, you understand it with market chart pattern, you literally just dump the market down and then it becomes quite easy. All right, it becomes what? Quite easy. So move forward by recognizing chart pattern, traders can anticipate future price movements and identify potential entry and exit points for trades. Okay, that's exactly what I'm saying. Okay, when you see a pattern like this, you can easily anticipate for what? For the next momentum in the market. When you see a pattern like this, you can easily anticipate for what? For the next movement in the market. This is not 100%. As a matter of fact, it is far from 90%. Okay, but with proper risk management, if you take this trade 100 times, there's a probability of you winning up to 60%. Okay. And when you apply a proper trade management and risk management plan, by that I mean your risk to reward ratio, you will end up winning much more than your losses. Okay. So you also have to follow rules. Okay. I'm not saying chart pattern is 100%. It is far from 100%. It is far from 90%, but it's in between 70, 80, 60%, around that area. All right. Based on my own personal research and back testing of over 800, 800 times, 800 data, 800 number of trades over that. I've been doing this since 2001. So I've learned about chart patterns since 2020 during COVID. So I've been back testing, I've been forward testing, I've been checking in and out. I see how they move. And I can categorically tell you that it is in between 60 to 80%. Okay, 60 to 80% that it plays out very nicely. I'm not and there's time frame also, the time frame of the chart or the pattern that you're looking at. If you're looking at chart pattern on the 1 minute time frame, I'm sorry, I'm not in there with you. If you're looking at it on the 15-minute time frame, I'm sorry, I'm not in there with you. But if you move it all the way to 1 hour and above, you might be cool. You might get up to 60 to 80%. And that is where I stage. All right. So moving forward, let's quickly wrap it up because we are almost, we are on time. All right, we are in time constraints. So moreover, chart patterns serve as a foundation for developing trading strategies and risk management. Okay, traders can use patterns such as triangles, head and shoulders, flag to formulate a trading plan and set stop loss orders. If you understand chart pattern very well and you try as much as possible to trade it accordingly, you can easily use chart pattern to set your stop loss, to plan for your entry, to plan for your take profit. It is quite explanatory. And it is very, very simple. Maybe that's why so many people are not doing it. Personally, as human beings, we are drawn to something hard. Okay, it will take some time for you not to want something hard. We are literally drawn to something hard. So maybe that's the reason why so many people are not using it. But I'm glad I get to use it. And I'm still using it. I use it every day. You will see it in my chat. Okay. For an example, let me quickly show you the trade we picked today and the kind of chart pattern that it has been shown. So this is a trade that we picked today. And as you can see right here, there are a couple of charts, there are a couple of patterns that were drawn right here. Okay, that is loading up. So let me use something else smaller. Okay. All right, very good. So right here, you can see we have, okay, good. So that is what I want to use right here. As the market is coming down, you will notice some things. The market then just fell down on its feet, isn't it? It didn't just do that. The market it formed a couple of patterns before it started dropping down. And that is what I am trying to explain to you. So if you look at the chart right here, okay, if you look at the chart right here, you will see the market drop down and form a little bit of what? Of a flag pattern, or you can even call it a little bit of a ascending triangle, but it's more like a flag pattern to me, but you can say ascending triangle right there, okay? Before it dropped down, and then right here again, it formed almost the same thing, and then it dropped down again. You can look at this on all the time frame. As long as the market is trending, you can easily follow this up back to back. Okay, I think we had the same thing on USD CHF, which seems to be running a little bit on a drawdown right now. All right, but it is very normal. Okay, so yeah, okay, let me see if I can make this a little bigger. Okay, so we have this bottom right here, and then we have something like this. Excuse me, we have something like this. Okay, and then at the top here, we have a little bit of this. Okay, we have a little bit of this. Excuse me. Seems like my internet is a little bit shaking. All right, I think it's not internet, it's just TradingView playing with me. And you can see we have a little bit of this. Okay, before the market started going back up. This is what I am trying to tell us. All right, before the market make any serious move, it forms what? It forms a pattern. It is your job to figure it out. Okay, it is your job to figure it out. When you see the market make this kind of move, you can categorically or you can even systematically just plan yourself out. You can plan yourself properly, wait for the market to finish whatever it wants to do, and then you can start looking for a possible entry. Okay, so right here, when the market break out of this range band, okay, after this market, when the market push up, it ranges for a minute and then went up. So right here, there's a breakout retest of this particular level right here. The market went up and then it pulled back. in the flag pattern ways, and then it went back up. And right here, what did it say? It pulled back again, and then it went right up. Now it's pulling back again. Okay, if it doesn't touch our stop loss before it went back up, then we're going to see something like this or something like this. All right. So, but before this trend can even be considered a bearish from this momentum that I can see right here, it has to break below here, this previous low, and then do what? Form something like this up and then come down. Then this is it's going to form another what? Another flag pattern. You can always see me look for this on the chart before I can say I want to pick any type of trade. All right. I can show you so many times I've tried to watch out for these. I've tried to look up to these just to make sure that, just to support my claim for the trend, because I am a trend trader, basically. Okay. So I don't want to waste much of our time on the charts because we have a lot to talk about. But you can see right here, you can see the way the market moves there. All right. You can see the examples. You can see the writings on the wall. Okay. You can see all the writings on the wall right here. And see how the market moves. Okay, and the breaker move here, drop down again, did this kind of descending triangle, up, down, move up, descending triangle, I mean, a symmetrical triangle, excuse me, and it went up. We're going to talk all about, we're going to take this pattern one by one. This series is going to be a long one, and like I said, a long but short one, that it will be much easier for you to understand. This is still the introductory part. Okay, I want to dumb it down. I want to break it down for you so much that if you actually play this video to a little girl or a little boy, he or she will understand it. Even the only thing that will be confusing probably might be the chart and be like, okay, what is that? But the concept of the chart pattern will be so easy to understand when we are done with this series. So let's go to the next one. So spotting a chart pattern. Okay, spotting a chart pattern. This is the second thing we're going to talk about today before we round it off. Okay, like I said, I don't want to bore you at the same time. I don't want to rush you. So spotting a chart pattern. First thing is, before you can call a pattern, you need to allow it to form. When it's done forming up, then you have to spot it. Okay, so these are the steps in spotting a chart pattern, because some people even think it doesn't work. Okay, as another condition that makes people not to trade it. So many people think it doesn't work. So if you want to enhance your trading skill, it is very important that you understand chart pattern and learn how to trade them properly. So step to spotting a chart pattern. Number one, identify the trend. When you are trading a chart pattern, it is very, very, very important that you do what? That you do understand the trend. Okay, you need to know the kind of structure or the market environment you are trading in. Are you trading in a range or are you trading in a trend? You need to understand that first off. Okay, before anything, are you trading in a range or are you trading in a trend? If you're trading in a range, then that is a whole different thing. If it's in a trend, that is a whole different thing as well. So your first assignment, or let's say your primary assignment, is to figure out the structure, the trend you are trading in, the market structure. Yes, basically the market structure. Okay, this is what I want to use. The market condition at which you are trading in. If you understand the market condition at which you're trading in, your job will become so easy. That is why I could still hold on to that sell trade on USD CHF, because I know it looks bullish. It doesn't even look bullish. It is bullish based on the 1 hour time frame and based on the pattern that has been forming slowly. It doesn't mean because it has repeated itself 3-4 times, mean it will continue. At the point it's going to break. Trend doesn't go up forever. It doesn't come down forever. At the same time, market don't range forever. So when you get the pattern, you get a trend, you trade it alongside that trend, and when it breaks, you take the loss and you look for the next trade. Simple as that. And don't forget, CPI just came. It was quite a memorable one. Went up, came down, very weird. It's scattered everywhere. So it is expected. What you're seeing in the market right now is very well expected. So don't fret, you didn't do anything wrong. For some of you that you're still holding the USDCHF trade, or maybe Kiwi dollar trade, or pound dollar trade, or even the gold sell trade, if you're still holding it, just relax. Okay, make sure you set a stop loss. Whatever happens, just relax. Okay, so move forward, identify the trend. Begin by identifying the prevailing trend in the FX market chart. The chart pattern are often categorized as continuation pattern or reversal pattern. So understand the current trend is a crucial for interpreting the significance of the pattern. So once you understand the current trend you are trading in, okay, or the current trend the market is currently in, then it will be much easier for you to know the pattern you want to trade. So let's assume, okay, I want to see what I can do right here. Let's see if I can make this place a little bit bigger. Zoom in. Let me zoom in right here. Okay, good. Let's make this place a little bigger. It's already big. So let's assume you're trading in a bullish market, okay, in a bullish trend. Now, you have to look for pattern, but don't look for pattern. You can either look for the pattern at the top here or look for pattern at the bottom here, okay? If you're looking for pattern at the top here, you're looking for what we call reversal pattern, okay, reversal pattern. If you're looking for pattern at the bottom here, after a pullback, you're looking for what we call continuation pattern, okay? The same thing goes for a bearish trend, okay? Let's assume the market is going down like this, lower low, lower high, lower low, lower high, all right? If you're looking for a pattern at the bottom here, you're talking about looking for a reversal pattern, okay? And if you're looking for pattern right at the pullbacks, okay, you're looking for what? For a continuation, what? A continuation pattern. So what is the difference between a continuation pattern and what? And a reversal pattern? It's simple. A continuation pattern is a pattern you trade when you are anticipating for a pullback, okay? When you are anticipating for a pullback, you know the market don't just go up like this. The only time we've seen the market go up like this is on USD CAD. And some of you know what I'm talking about. Okay, it is currently just going up, even on the 1 minute time frame. It was so steep that you can hardly get a very decent Fibonacci pullback. I mean, up to 50% Fibonacci pullback. If you take the USD CAD right now, the market is currently right now, today is 10th of October. Okay, if you check USD CAD right now, on the 4-hour band, it is very steep. It almost looks like a straight line. If you now move further to checking it on the 8-hour time frame, it is already a straight line. Just don't take it to daily time frame because the only thing you see is just bullish candlesticks. That's all. So when you see something like that, it will be very hard for you to look forward for a chart pattern because the market is not going down very well. It is very steep. Okay. But in a market moment, in a market structure, a market condition that looks like this, okay, in a market condition that looks like this, higher high, higher low, higher high, higher low, higher high, or lower low, lower high, lower low, lower high, lower low. This is the kind of condition you want to look for. Chart pattern here, chart pattern here. You have to look for the chart pattern at what? At every point of the pullback. Okay, so if you see a chart pattern here, or a chart pattern here, or a chart pattern here, a chart pattern here, you can anticipate for trades that we call continuation. This pattern are called continuation chart pattern, and you can easily look for trades what to continue the trend. Right here, you can look for what? A buy trade to continue the trend. Right here, you can look for trade to what? A sell trade to continue the trend. Right here, you can look for what? A sell trade to continue the trend. That is what a continuation pattern looks like. Okay, you always look for them at what? At every pullback area. All right, at every pullback area. And I'm going to quickly show you something right now. So look at this chart at the bottom here. I really don't want to clean every single thing here. So let's see how I can actually drag this up a little bit. Okay. Let's see how I can drag this up a little bit so as to ensure that we get the proper. All right, I think this is good. Okay. All right, let's use this example. I don't want to delete what I'm drawing because let me just delete it at once. I can just Ctrl Z. So right here, you can see what happened here. When the market went up, I'm using a color that you can see. Good. When the market went up right here, what happened again? It did what? A pullback. That is where you want to start looking for what? A continuation pattern. When the market went up again here, what happened? It did a pattern, and at a point at this top, it broke to the downside, it pulled back, it formed another pattern, and it started coming down. So right here, we have a continuation pattern. Right at the top here, we have what we call reversal pattern. Okay, reversal pattern. And right here again, we have what we call continuation pattern. Okay. It is as simple as that. Initially, the market was what? The market was coming down. Right at the bottom here, we have what we call what? A reversal pattern. Okay, a reversal pattern. And then right here again, we have what? A continuation pattern. Simple as that. Okay, you just need to build your eyes in a way to be able to spot all of these patterns accurately. If you can do that, it will simplify your job so well as a what? As a trader. All right. So let me control Z. I think I've actually explained the everything I need to explain about the chart pattern. Okay, both reversal and okay, good. So I'm going to just drag this down now a little bit. Good. So now we've talked about the continuation pattern as an example. So now let's talk about what? Let's talk about the reversal pattern real quickly before I go on. Okay. So talking about reversal pattern, you want to look for reversal pattern right at the top here. When a trend is overly what? Overly exhausted. Okay. When the trend is overly exhausted, because sometimes you ask yourself, how would I know when the trend is exhausted or when the trend is over? The only way you would know is through chart pattern. And the type of chart pattern you want to be looking for is what? A reversal pattern. And we have a couple of examples of reversal pattern, not just one. You don't need to be looking for one. We have up to 4 or even more. But I use just 4 to look for reversal, both for bullish trend and for bearish trend reversal. Because you can see initially the market was going up right here. So we call it what? We call it a bullish trend. And when you see something like this that form up at the top here, okay, now we have what? A bearish trend, because the market has reversed from being bullish to what? To being bearish. Okay, that's what I mean by reversal. This right here at the top is a what? Is a pattern. Okay, and it's called head and what? And shoulder pattern. All right. Right here at the bottom, if you look, you see something like this. Okay, this also is a what? Is a reversal pattern. It's the junior brother of head and shoulder pattern, because that one is called inverted head and shoulder pattern. Okay, inverted head and shoulder pattern. It is very well used. Some people will call this change of character. They won't call it head and shoulder pattern or inverted head and shoulder pattern. What they will call it is what? Change of character, a market shift. And then they will have so much English to it that you would literally forget that that pattern is actually head and shoulder pattern. The way the English will be built up, the way it be composed, literally you will forget that that pattern is actually head and shoulder pattern. But it is still the same thing. It's just a bunch of what? Bunch of terminologies, bunch of English. Okay, that is all what it is. All right. So moving forward, we have 2 major patterns based on what the direction you want to trade. Are you trading a trend, or you just want to what? You just want to trade the range. Okay, you want to trade the range, there are some patterns you can also look at, which we'll be discussing in the next session. All right. So all of that said, this is where I will be leaving you today, which is identifying trend. Okay. By next week, Thursday, I'll be coming again to tell you about scanning the price chart, confirming the pattern, and what? Measuring the price target. And lastly, waiting for confirmation. That's what I will be explaining to you before we now start talking about this pattern, one after the other. Like I said, I don't want to bore you. I don't want to start falling asleep on me on the call. At the same time, I don't want it to be too long, because I'm posting the video on YouTube, and when it's too long on YouTube, nobody really watch it. I mean, would you watch a 5 hours video on YouTube? You definitely will not. But you will consider watching a 10, 30-minute videos than watching just a single 5 hours, right? That is how it goes. So I will see you in the next videos. I will see you in the next class. Have a fabulous day. Prepare yourself. The next class comes with the writing materials, all right, so you can pick some points and take a screenshot as many as possible. I will see you in the next one. Have a fabulous day. Bye for now. Don't forget to go ahead and subscribe to our YouTube channel. It is very, 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 very important. So thank you. You're most welcome, Sharon. You're most welcome. Like I said, I am here to help you learn how to do what? How to make money. And I'm going to teach you in a way that if you really sit down to learn this thing very well with me, you will definitely receive the result. Just give yourself 2, 3, 4, 5, 6 months. Okay, you will see the result. All right. So have a fabulous day. Enjoy the rest of your day, basically. Bye bye.